and partnerships, culture, cinema, gaming. Waves fuels the next wave of entertainment.
Connecting creators, connecting countries. Waves 2025.
This is India's #1 news network, and you're watching News 9. English news as it should be.
Hello and welcome. You're watching Morning Brief at 9. I'm Shweta Kothari. On the show today, as tariff war escalates between US and China, what does it really mean for emerging markets like India, and what cues should you be tracking through the day? Coming up very shortly with Amit Gupta on Morning Brief at 9. Watching Morning Brief at 9. Let's start the day with the headlines first. US President Donald Trump announces a pause in big hikes on tariffs for almost all countries for 90 days except for China. Most countries will be left with a 10% tariff on their exports to the US, while China, which retaliated against Trump's moves, will now face tariffs of 145%. Wall Street's main indexes fell on Thursday on concerns over the impact of high tariffs on global economy, with stocks pulling back from the sharp gains made a day ago when US President Trump announced a temporary move to lower levies. The S&P 500 dropped 3.5%, while the tech-heavy Nasdaq dropped 4.3%. The Dow Jones closed about 1,000 points down at 2.5%. The US dollar declined on Thursday against both traditional safe haven currencies like yen, Swiss franc and euro, as well as risk-sensitive currencies such as Australian dollar. The move came as markets absorbed President Trump's unexpected decision to pause certain tariff hikes. Gold prices jumped nearly 3% to an all-time high on Thursday as a drop in dollar and an escalating trade war between the US and China drove investors towards the safe haven allure of the precious metals. Spot gold climbed 2.8% to close at $3,168.26 an ounce and continued to be above 3% for the remainder of the day. Tech giant Apple chartered cargo flights to ferry as many as 600 tons of iPhones or as many as 1.5 million iPhones to the US from India after it stepped up production in an effort to beat President Trump's tariff war. Services TCS said it was deferring salary hikes for employees starting April, citing economic uncertainty as the ongoing tariff war intensified between the US and China. India's largest IT player also reported a subdued fourth quarter financial year result. TCS posted a net profit of 12,224 crore rupees for the fourth quarter of financial year 25, down 1.7% compared to 12,434 crore rupees in the same quarter of financial year 24. Home Services startup Urban Company has received an approval from its board of directors to raise as much as 528 crore rupees, which is roughly $60 million in a fresh capital via initial public offering or IPO. The Axel-backed company has initially planned to file a draft potential IPO of 3,000 crore rupees this year. However, its current target price is over 80% smaller. AKASA Air is aiming to grow its fleet to 30 aircraft by July, with its 28th Boeing 737 MAX set to join this month. Vinay Dubey, chief executive, said, underlining the budget carrier's expansion plans after facing a setback due to a protracted delay in delivery of planes. Luxury brand PRADA struck a $1.38 billion deal to buy smaller rival VERSACE from Capri Holdings on Thursday in a move that unites two of the biggest names in Italian fashion. Our top story at this hour, US President Donald Trump has dramatically ramped up his tariff push against China. A White House order confirmed that a steep new hike that took effect on 10th of April brings the total additional rate on many Chinese goods to a staggering 145%. This includes a fresh 125% hike stacked on top of a 20% duty that was imposed earlier this year linked to China's alleged role in fentanyl crisis. At the same time, remember, Trump has now rolled out a 90-day pause on many tariffs for dozens of countries, including India. Now, while the sweeping new rate on China is aimed at what the US calls unfair trade practices, key products like steel, aluminium, auto remain under separate tariff regimes. Others, including semiconductors, pharmaceuticals, energy products, are currently excluded, although officials say that they may be targeted at a later date. As tariff tensions escalate between the world's top two economies, analysts are warning of an escalating mix of trade rules, exclusions and retaliations, with global markets now on high alert. And meanwhile, Beijing maintains a firm but a measured stance amid rising trade tension. China's Commerce Ministry said it remains open to talks with the US, but only if they conduct an equal footing and with mutual respect. The Foreign Ministry echoed the same, saying that China does not want a trade war, but it will not back down if the US continues to escalate its tariff threats. Listen in.
China's position is clear and consistent. The door to talks is open. But dialogue must be conducted on an equal basis with mutual respect. China will stand by its position until the end. Pressuring, threatening, and blackmailing are not the correct ways to deal with China. We hope that the US will work with China based on the principles of mutual respect, peaceful coexistence, and win-win cooperation. We will properly resolve differences through dialogue and consultation. I have reiterated China's position many times, and it is very clear. We do not provoke trouble, nor do we fear trouble. The legitimate development rights of the Chinese people and the people of the world cannot be taken away. China's and other countries' sovereignty, security, and development interests should not be infringed upon.
The United States is still imposing tariffs on China, and China is firmly opposed to such bullying. China will absolutely not accept pressure, threats, and blackmail. That is not the right way to deal with China. If the US side really wants to talk, it should show an attitude of equality, respect, and reciprocity. If the United States ignores the interests of the two countries and the international community and insists on fighting a tariff war and a trade war, China will certainly accompany it to the end. The United States, driven by self-interests, has weaponized tariffs as a means of exerting maximum pressure and seeking unilateral benefits. This severely infringes legitimate rights and interests of other countries, constitutes a grave violation of World Trade Organization rules, seriously undermines the rules-based multilateral trading system, and poses a major threat to the stability of the global economic order. It is a blatant act that defies international norms and runs counter to the entire world.
And let's now take a look at how the tariff war across the globe is unfolding. First, on 2nd of April, US President Trump announced to impose a 10% baseline tariff on all imports to the United States and higher duties on some of the country's biggest trading partners, rattling the global market order.
If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here, we didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So it's 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be because we never charged anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff.
And just days after announcing that sweeping 10% baseline tariff on imports, President Trump made another major announcement on 4th of April, and he revealed that pharmaceutical industry would be facing new tariffs as well.
The chips are starting very soon. The pharma is going to be starting to come in, I think, at a level that you haven't really seen before. We are looking at pharma right now, pharmaceuticals, as a separate category. And we'll be announcing that sometime in the near future, not too distant future. That's under review right now.
And then later, on 8th of April again, Trump reiterated that the US is planning to announce a major tariff on pharmaceutical imports, a move that rattled India's pharma sector as well.
We have to do, we're going to tariff our pharmaceuticals, and once we do that, they're going to come rushing back into our country because we're the big market. The advantage we have over everybody is that we're the big market. So we're going to be announcing very shortly a major tariff on pharmaceuticals.
And then just a day later, making a U-turn, Trump announced a 90-day pause on all tariffs for all countries except China.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, you know. They were getting a little bit yippy, a little bit afraid. Somebody had to do what we did, and I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate.
And now the tariff war between the US and China is further intensifying. While both sides are standing firm in their positions, China slapped an 84% tariff on all US goods. President Trump did not waste any time announcing an immediate increase in US tariffs on Chinese imports to 125%, up from the previously declared 104%. This brings the total tariffs on certain goods and items being imported to the US from China at a staggering 145%.
The deal's going to be made with China. The deal's going to be made with every one of them. And they'll be fair deals. I just want fair. They will be fair deals for everybody. But they weren't fair to the United States. They were sucking us dry, and you can't do that. Bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had, well, the big move wasn't what I did today. The big move was what I did on Liberation Day.
And all of this had a steep impact on the Wall Street, which took a sharp hit on Thursday as investor confidence gave way to the mounting fears over economic fallout from President Trump's widening tariff war. All three major indexes stumbled, giving up much of the ground gained in the previous session. Take a look.
Wall Street volatility on Thursday, with the Dow dropping 2.5%, the S&P 500 shedding nearly 3.5%, and the Nasdaq losing 4.3%. All three indexes forfeited much of the previous session's gains as growing concerns over the escalating U.S.-China trade war dampened optimism over upbeat economic data and trade talks with Europe. Alexander Morris is CEO of FM Investments.
All of the tariff news, all of the auction news we hear, even the good bits are now getting drowned out by the fact that the markets are starting to price in any good bit of news can be taken away in a tweet, and any bad day can be turned around just as easily. That instability makes prices weaker, and we're seeing that in markets today.
Following the whipsaw of Wednesday's bounce and Thursday's sell-off, the S&P 500 remained more than 7% below where it was just before the reciprocal tariffs were announced last week. Nearly lost in the shuffle Thursday was a Labor Department report showing consumer prices unexpectedly cooled in March. But Federal Reserve policymakers said this week that they continued to view Trump's tariffs as inflationary and a potential blow to economic growth. Among the day's stock moves, big tech came under pressure once again, with each of the so-called Magnificent Seven stocks suffering substantial losses. Shares of CarMax slid 17% after the used car retailer missed fourth-quarter profit expectations. Friday kicks off first-quarter earnings season with big banks including JPMorgan Chase, Morgan Stanley, and Wells Fargo due to report.
And gold prices too jumped nearly 3% to an all-time high on Thursday as a drop in dollar and an escalating trade war between US and China drove investors towards the safe haven allure of the precious metal. Spot gold climbed 2.8% to touch $3,168 an ounce after hitting a record high of $3,171.49 an ounce earlier in the session. US gold futures also rose 3.5% to touch $3,185.5 an ounce. US President Trump said, remember on Wednesday, that he would temporarily lower hefty duties on dozens of countries, but also ramped up tariffs on China to 125% from 104%. Gold rates jumped to hit a new record in the domestic future markets as well on Thursday, with MCX gold contracts jumping over 1% to hit a fresh high of 91,464 rupees per 10 gram. And moving on now, India's largest IT company by revenue, Tata Consultancy Services TCS, said it was deferring salary hikes for employees starting April, citing growing macroeconomic uncertainty, which is now intensified by the ongoing tariff war between the US and other countries. The hikes will be implemented later in the financial year once there is greater clarity and the outlook improves, the company executives informed on Thursday. Now, TCS also missed street expectations on both the revenue and profit fronts as far as January to March quarter is concerned. The IT firm faced project deferrals, remember, in March, and near completion of the BSNL deal added fewer numbers to the top line. This was the second consecutive quarter that the company missed estimates. Now, consolidated revenue rose 0.8% sequentially to 64,479 crores, missing the estimates, as well as the net profits, which also declined by 1.3% quarter on quarter at 12,224 crore, falling short of the estimates, which were at 12,765 crore rupees. And moving on, Byju's Alpha, a unit created by embattled edtech giant Byju's in the US, has now filed for a lawsuit alleging that the founder Byju Ravindran, co-founder Divya Gokulnath and advisor Anita Kishore orchestrated and carried out a scheme to hide and misappropriate $533 million in loan proceeds. The lawsuit filed by Byju's Alpha in US bankruptcy court for the District of Delaware on behalf of term loan lenders follows a February 28th ruling that found Riju Ravindran Byju's and Camsha funds to have committed multiple fraudulent transfers as well as conversion of $533 million in loan proceeds, and that Ravindran breached fiduciary duties as a director of Byju's Alpha. Now, Byju's Alpha is a Delaware special purpose vehicle. It was created to receive the proceeds of the $1.2 billion term loan B, which was seized by creditors and placed under Chapter 11 of the bankruptcy after once controlling the $533 million in question. At this point, Byju Alpha is now escalating, now filed a lawsuit against Byju's in the US, alleging that founder Byju Ravindran, co-founder and advisor, orchestrated and carried out a scheme to hide and misappropriate a part of that $1.2 billion loan to hide approximately $533 million in loan proceeds. And time for a short break now. We'll be back with more on the other side. You're watching Morning Brief at 9.
does it take to be the greatest in the world? There is one thing which truly sets you apart. Your inner strength. SUBDUED TMT Reebok, true inner strength.
Smash your way to glory at the News 9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News 9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
I need expert performance. I need my career.
Mama must be missing us, nah?
Let's take you on spin, give me one day. Feel the itch under my skin, it's a one day. You believe it when you see me and done, hey. It doesn't matter, just gotta get going.
New GT line, Taigun and VERSACE. Volkswagen.
Smash your way to glory at the News 9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News 9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
Welcome back. You're watching Morning Brief at 9. Let's take a quick look at how markets have opened this Friday, and it looks like a sea of green. We'll try and pull that chart on your screens very, very shortly. Nifty 50 up 1.67% at 22,773. Sensex is also making gains, steady gains there at 1.67% up. Currently hovering at 75,029 mark. Both mid-cap and small caps also staging a recovery. Mid-cap up 1.43% at 50,291. Small cap up 1.68% at 15,512 mark. India Wix, the volatility index, is down 5.78% at 20.19. Remember, the markets opened this morning. They were closed yesterday for Mahavir Jayanti, and on Thursday, I beg your pardon, the Nifty 50 had been a range-bound session again amid tariff-led uncertainty, possibly waiting for a trigger related to tariff to gain some direction. The index closed 0.6% lower on 9th of April after the RBI policy. The Wix remained above 20 mark. However, Donald Trump's decision later in the day on Wednesday to pause the reciprocal tariff for all trading partners, barring China, raised hopes of an upward change in the market trend, and that change has now come in. Amit Kumar Gupta joining us live at this point to make sense of how markets are likely to move. Amit, some positivity there in Indian stock markets, but this was expected since markets were closed yesterday.
Yeah, hi Shweta, thank you for having me. Yes, I think market reacted to the news on Wednesday late night that all other countries except China will be at 10% tariff. So I think some positivity was expected. In fact, last night actually the markets actually declined a little bit. So otherwise we could have even had a better opening. Nevertheless, I think the global uncertainty as far as US and China relations are concerned, that will continue. But for other countries now, it's a matter of how the negotiation goes and in what sectors you can get a better deal out of it. So yeah, things are looking better for India at least.
All right. But Amit, things are only looking better for the next 90 days because 90 days is the time window within which all countries, including India, will have to really figure out a trade deal with the US in order to ensure that those 26% tariff, at least on Indian goods, don't kick off 90 days later. So although the bad news is shifted a little bit, but it still stays. 90 days later, we could see a similar sort of meltdown in the markets.
Yeah, the uncertainty continues. It has just got a little less than what it was 2-3 days ago. But the sense is that India's impact with the US is not more than $6 billion. In the worst case, $10 million. So this can be negated to probably $5 billion or less. My sense is already there are a lot of negotiations which are going on in the background. And probably, within the next 90 days when the negotiations happen, things can even look much better. So we will not know the contours of those negotiations as of now. But given what we are reading through the various interviews from both sides, India looks like, they'll get a better deal out of it, especially in, critical sectors like pharmaceuticals, etc. So I will not be, too pessimistic on the fact that, even within 90 days, nothing will happen. Obviously, the uncertainty happens. The global growth is at question because, US and China are two large global partners. They have $600 billion within them. We are already seeing that, a lot of companies in US, they have stopped taking orders or, they're canceling orders. In China, a lot of factories, they've asked workers to go on leave. So this will create stress on the global growth, and obviously India will also get impacted.
In fact, I was about to come to that, Amit. As far as global trends is concerned, right now it does look like India is an outlier, given how US markets tanked yesterday. As a matter of fact, even Asian markets traded very low, and following, of course, a sell-off in the US markets, India continues to be an outlier in the global gloom and doom, at least, that unraveled in the markets.
Yes, I mean, India is not that much impacted. As I said, it's a $6 to $10 billion kind of an impact as compared to, let's say, $600 billion for China and US. But I'm not reading too much into very day-to-day movements. I'm looking at the bigger picture, and my bigger picture is that if the US-China relationship continues to deteriorate and there is no headway, then eventually companies need to find other ways to do business, and the supply chains gets routed. And how India is going to benefit out of that needs to be seen. So let's not get caught up in day-to-day movement. I think there is volatility. There are huge negotiations which are going on at the back of the envelope, and you don't really know which sector will get impacted in what way. So it's a little bit of a wait and watch, and continue to fine tune the investment strategy based on that.
Right. Let's also quickly take a look at some of the sectors and how they're doing. I want to especially talk about the IT pack because there's some sort of relief there, when it comes to the IT pack. And those of course, stocks on your screens right now, TCS down 0.5%. Well, that is, of course, also on the back of the fact that their fourth quarter results have been tepid. Infosys reporting 1.5%. This morning, Wipro up almost 2%, HCL Tech up 2.29%, Tech Mahindra also up 2.5%. So IT pack reacting positively. Amit, what's your sense of how IT stocks are going to take a cue on what's happening in the US? We know, you mentioned that some of those deals will have to be negotiated, but as far as IT pack is concerned, it's a mix of good and bad.
Yes, I think TCS result was a little bit of a flat kind of a result in Q4. The deals were up quarter on quarter about 20%, but they were down about 8% year on year. The management has guided that international markets will be better in FY26 as compared to FY25. But I think, we remain cautious on the IT pack. I think too little time has passed to certain whether the current events are short-lived and whether there is going to be impact or not. My sense is that whenever there is a huge volatility, then the BFSI packs gets impacted first in US, and that directly impacts the Indian services company, at least Indian IT services company, because almost 42% of the revenues comes from the BFSI. So I think that as far as the TCS result is concerned and the impact today on the IT sector, the deal which is doing in the markets, that is a little encouraging. But how much respite we get from the international business in H1, that needs to be seen.
All right, Amit, but before I let you go, I have to talk about pharma stocks as well, because they are also outshining as of this morning, given that they are also maybe perhaps sighing some bated breath of relief after that pause that came by the way of tariffs. Let's quickly take a look at some of these pharma sectors right now. Sun Pharma up almost 4.5%. Cipla and other important stocks also reflecting that positive sentiment. What happens to pharma here on? There's no clarity really on whether tariffs will come through, not come through, or whether there'll be baseline 10% tariffs. But pharma stocks, is that something one should be buying right now? Or are they too volatile?
No, I mean, if someone does not have a position, they can probably wait a little bit out. And if someone has the position, then you can hold it. My sense is that, it will probably remain at the 10% tariffs base level. Eventually, US needs cheaper drugs, and India is a prime candidate to provide that. So I think a lot of the stocks got sold off on day before yesterday trading sessions on this tariff being at 26% or even higher. So there was a comment made by Trump also that pharmaceuticals tariffs will be there. So there was a little bit of impact. So a lot of relief rallies there in today's market. But as of now, we are working with the assumption that it's not going to be more than 10% tariff on the base effect.
All right. The assumption is that it's going to be a 10% tariff. Amit, there's been a lot of volatility in the gold prices as well, and that was expected as people are now flocking to the safe haven asset. What are you making of the gold price chart right now, hovering around 92,000 for 10 gram, at least in India? Are these prices likely to go further up, given that there is so much volatility? I understand it's very difficult at the moment, especially for retail buyers, to take a call.
Right. So I think, obviously there is a lot of uncertainty in the global markets, which gold is a beneficiary for that. We are also seeing dollar index, coming to almost 100 levels. In fact, this morning it briefly went below 100 also. So again, that is, positive for the gold prices in the short run. But having said that, I think it's a trade. One needs to be very nimble to get in and out of this kind of volatility in the gold prices. So if someone has it, from the very lower levels, then they can probably look at, booking some profits from here on. But we will be not fresh buyers in gold at these prices. We will probably hold and take a call of booking profits intermittently over the next 1 month or so.
Amit, before I let you go, and I have to, it's been a week of uncertainty. Thank God it's a Friday. What are the key triggers you'll be tracking next week onward, given that at least 90-day pause is likely to continue?
So for me, I think, what happens between US and China would determine a lot of things. At 54% tariffs also, the trade was impacted very heavily. Right. I think they've increased it now to 145%. It really doesn't matter now, because whether they increase it further, it's a more of an ego tussle right now. But how this equation develops over the next few that will be very critical because that will determine how India is going to probably benefit out of it, that or not. Apart from that, I think there are other countries who are also negotiating. So we really need to see. It's a wait and watch in that sense.
All right, it's going to be a wait and watch as far as other countries is concerned, but one will be closely eyeing the trade deal possibility of tariff war abating and resting it out, and possible solutions perhaps that US and China can come to table, perhaps have a conversation. Amit, thank you very much for all those details. Thank you for joining us here on Morning Brief at 9. Let's now take a look at the top global stories we are tracking. Canadian Prime Minister Mark Carney pledges strong retaliation against US tariffs, aiming maximum pain to the US while protecting Canadian workers and businesses. US Treasury Secretary Scott Bessent says there's nothing unusual about Wall Street's sharp sell-off after President Donald Trump's tariff shift on China. And US is reviewing tariff proposals from 15 countries and nearing deals with some after Trump eases trade duties, says the White House advisor. US consumer prices fall for the first time in nearly 5 years, but Donald Trump's sweeping China tariffs threaten to reverse inflation gains. European Union shares rally after Donald Trump announces a 90-day tariff pause, easing market fears and boosting sectors like banking and miners. European Union paused plans for countermeasures on US tariff for 90 days after Trump temporarily reduced duties, showing potential for renewed trade negotiations. Volkswagen's first quarter earnings plunged 40% due to EU emission penalties and US tariff impacts, but shares rise on relief from US tariff pause and potential regulatory rule changes. China retaliates against US tariffs by restricting Hollywood film imports, while US President Trump addresses market volatility and emphasizes his commitment to reaching a deal with China. Uniqlo operator Fast Retailing lowers profit forecast by $68 million due to US tariff impacting North American businesses despite raising full-year outlook. All those stories and more after this very short break.
What does it take to be the greatest in the world? There is one thing which truly sets you apart. Your inner strength. SUBDUED TMT Reebok. True inner strength.
Smash your way to glory at the News 9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News 9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
Mama must be missing us, na?
Let's take you for a spin, give me one day. Feel the itch under my skin, it's a one day. You believe it when you see me and done, hey. It doesn't matter, just gotta get going.
New GT line, Taigun and VERSACE. Volkswagen.
Welcome back. Canadian Prime Minister Mark Carney has hit out at US President Donald Trump's tariffs during a rally on Thursday, reaffirming his government's commitment to responding with targeted retaliatory measures. Carney emphasized that the goal is to minimize the impact on Canada while causing maximum pain on the US. He assured the crowd that the funds generated from these tariffs would be used to protect Canadian workers and businesses, while reinforcing that the broader measures and message that Canada is becoming stronger amid ongoing trade pressure, and that message, of course, he sent out to the crowd in that rally. Listen in.
We are fighting unjustified U.S. tariffs, including those on steel and autos, with counter tariffs of our own. And those are designed to cause maximum pain in the United States, but have only a minimal impact here in Canada. We are protecting our workers and businesses, because we're using every dollar that we collect from those retaliatory tariffs, and we use it to protect our workers. But above all, what we are doing is Canada strong. Canada strong. Thank you very much. Merci beaucoup.
And amid the ongoing tariff war, U.S. Treasury Secretary Scott Bessent is easing concerns following a sharp sell-off on Wall Street. Speaking on Thursday, Bessent said that there was nothing unusual about markets' pullback, which erased much of the gains seen just a day earlier. The drop came after President Donald Trump announced a 90-day pause on tariffs for a dozen of countries, but also raised duties on China, leaving investors uncertain about the broader direction of the U.S. trade policy.
Mr. President, can you give us a reaction to today's stock market drop and also give us a sense of the next steps with China?
Well, I haven't seen it because I've been here for 2.5 hours, so I'll be saying it. I think Scott, you want to have a statement on that?
Sure. Look, the up 2, down 1 is not a bad ratio, or up 10, down 5. And I think, as we have talked about, as we go through the queue and settle with these countries who are going to bring us their best offers, we will end up in a place of great certainty over the next 90 days on tariffs. We had very good inflation numbers today. Oil's down. We had a successful bond market, so I don't see anything unusual today.
And meanwhile, the White House says progress is being made on the trade front. Economic advisor Kevin Hassett said that the United States is now considering a tariff proposal from at least 15 countries and is already nearing agreements with several of them. Listen in.
The pause was based on good faith conversation. I was on a call with the president of Switzerland yesterday morning that was incredibly congenial. And USTR has informed us that there are maybe 15 countries now that have made explicit offers that we're studying and considering and, deciding whether they're good enough to present to the president. And we're setting up with the Chief of Staff's office a very orderly process to prioritize countries and to make sure that the countries that are most important for getting this to the finish line are the countries that we bring in first. We could do negotiations a number of ways. We would expect that there'll be quite a bit of movement of world leaders into the White House in the next 3 to 4 weeks. But yeah, this is a really fast process now that's not beginning today or yesterday. It began long before.
And U.S. consumer prices unexpectedly fell in March for the first time in nearly 5 years, driven by cheaper gasoline and used vehicles. The consumer price index dipped by 0.1%, surprising economists who had expected a slight increase. However, the inflation improvement may not last, as President Trump's trade policies and higher tariffs on Chinese goods are expected to push prices back up in the coming months.
U.S. consumer prices in March fell for the first time in nearly 5 years, according to a report from the Labor Department on Thursday. The consumer price index dipped 0.1% last month. Economists polled by Reuters had expected it to edge up by that amount. It was the first monthly decline in prices since May of 2020, putting the annual inflation rate at 2.4%, closer to the Federal Reserve's target of 2%. But will the downward trend continue? March's data likely captured only a fraction of the first wave of President Trump's barrage of import duties, which most economists expect to be inflationary. Lower prices could also be a sign of softening consumer demand amid heightened recession fears due to Trump's tariffs. Trump on Wednesday said he paused targeted tariffs on trade partners for 90 days, but a 10% blanket duty on almost all imports remains in place. He also jacked up tariffs on Chinese merchandise to 125%. Consultancy firm Capital Economics estimated that U.S. inflation will peak at about 4%, double the Fed's target. And minutes of the central bank's March policy meeting published Wednesday showed Fed officials were nearly unanimous that the economy faced risks of both higher inflation and slower growth.
And European markets saw a massive surge yesterday as shares surged after US President Trump announced a 90-day pause on tariffs for many American trading partners during a massive relief rally.
European shares surged on Thursday. Investors cheered after US President Donald Trump announced an immediate 90-day pause on tariffs for many trading partners. It prompted a massive relief rally following a days-long market rout. The suspension came less than 24 hours kicked in, although the White House kept a 10% blanket duty on almost all US imports. The Pan-European Stock 600 jumped 7.2% in early trade. It had previously lost 12.5% since the US reciprocal tariffs were put in place on April 2nd. Trade-sensitive Germany's benchmark index also rose more than 8%. All sectors were higher, with the most battered ones this month, banks, miners and energy, rising by around a tenth each. A strong US Treasury sell-off in the previous sessions also showed some signs of easing on Thursday. But the trade war between the US and China continued. Trump further ramped up pressure on Beijing by hiking the tariff on Chinese imports to 125%. It was in retaliation for China's announcement of an 84% levy on US goods starting April 10th.
In a sign of easing trade tensions, the European Union has decided to pause its planned countermeasures against US tariffs. The EU announced that the move follows US President Trump's temporary reduction of hefty tariffs imposed on dozens of countries. Listen in.
We are not going to offer any greater detail at this point about what we are or are not saying to the Americans beyond what we have already said. We want to negotiate. We want to talk. We appreciate that you have brought this pause on so-called reciprocal tariffs, and we in turn are now pausing our proposed countermeasures in order that we have the maximum space to consult with our member states, consult with our industry and negotiate with the US. We're ready to make deals. Let's talk.
And moving on, Volkswagen's first quarter earnings have taken a massive hit, falling around 40% and well below market expectations. Europe's largest car maker has been struggling now with financial fallout from missing EU carbon emission targets, which led to hefty penalties earlier. Take a look.
Volkswagen's first quarter earnings fell far short of market expectations on Thursday, plunging about 40%. Europe's biggest car maker has had to factor in costs for penalties of missing EU carbon emissions targets, in addition to the impacts of US tariffs. VW shares were up over 8% though, as relief swept through the markets after the US administration's announcement of a 90-day pause on tariffs. But a 25% tariff on auto imports remains in place, and VW is heavily exposed. After lobbying from the car sector, the European Commission has proposed to loosen rules that most of the industry is likely to breach this year. The proposal would give VW and the rest of the industry more time to boost sales of low-emission electric vehicles. But it's yet to be approved by the European Parliament. A VW spokesperson declined to provide detail on the costs related to US tariffs. The bulk of the VW brand's US sales is from cars made in Mexico, and its Audi and Porsche brands have no US manufacturing base. The company confirmed its full-year outlook of up to 5% sales growth, but said in its results statement these forecasts excluded the possible impact of tariffs, since it was too early to assess their impact.
China announced on Thursday that it would immediately restrict imports of Hollywood films in retaliation for US President Trump's escalation of US tariffs on important Chinese goods. The move targets one of the most high-profile American exports, further escalating tensions between the two economic giants.
China on Thursday hit back against U.S. President Donald Trump's escalation of tariffs on imported Chinese goods, saying it would immediately restrict imports of Hollywood films. The move targets one of the most high-profile American exports. Industry analysts said the financial impact was likely to be minimal, however, because Hollywood's box office returns in China have declined significantly in recent years. Also declining was the value of U.S. stocks on Thursday. The benchmark S&P 500 stock index fell 3.5%, a day after surging on Trump's suspension of tariffs for 90 days on several countries except China. During a cabinet meeting, Trump acknowledged the market volatility occurring as he tries to resolve the disputes.
Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing.
Trump reiterated his desire to reach an agreement with the world's second largest economy.
What happens with China? We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. They've ripped us off beyond nobody. How people stood for it, sitting in my position, is not even believable. About many presidents, not just a couple. But they did, and all we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well.
Meanwhile, companies with complex and diverse supply chains spanning multiple countries from China to Germany were already scrambling to work out how they would be affected by duties and grappling with possible price hikes to mitigate tariff risks. The 90-day reprieve has only added to the confusion. Some companies, including General Motors, have built up inventory in the U.S. to get ahead of tariffs. And Federal Reserve policymakers this week said they continued to view the tariffs as a blow to economic growth that also raised the risk of higher inflation.
And shifting focus now, TSMC, the world's largest contract chip maker, reported a 42% surge in first quarter revenue, reaching $25.6 billion, slightly surpassing the market expectations. The boost was driven by a strong demand for semiconductors, particularly due to the rapid growth in artificial intelligence.
Taiwan chip giant TSMC saw a strong start to the year, but tariff worries are looming. The world's largest contract chip maker on Thursday said first quarter revenue hit $25.6 billion. That was up 42% on the year and just ahead of analyst estimates. TSMC has been one of the big winners from the AI boom. It supplies customers including Apple and US AI chip champion NVIDIA. Demand for the new tech has more than offset waning sales of consumer gadgetry, which had boomed during the COVID pandemic. But shares in the firm have plunged since US President Donald Trump announced sweeping global tariffs last week. That included a levy of 32% on goods from Taiwan. Chips were excluded, however, and Trump has since postponed enforcing the tariffs for 90 days. But the on-off nature of policymaking in Washington leaves investors anxious about what the future holds. TSMC shares rose close to 10% on Thursday, in line with wider market gains sparked by the postponement of Trump's tariffs.
And PRADA has now announced a deal to acquire rival VERSACE from Capri Holdings, aiming to unite the two of Italy's most iconic fashion brands. The deal, valued at $1.3 billion, was confirmed by PRADA on Thursday. This acquisition comes as PRADA seeks to expand its presence in the luxury market despite facing a slowdown in luxury demand of late. I leave you with that story.
In a move to unite two of the biggest names in Italian fashion, PRADA is to buy smaller rival Versace from Capri Holdings. The deal has an enterprise value of $1.375 billion, PRADA said on Thursday. PRADA is seeking to expand, having defied a slowdown in luxury demand, while Versace has been operating at a loss. The merger strengthens Italy's hand in a luxury industry led by French conglomerates. The price PRADA has agreed to pay for Versace is a big discount to the roughly $2.15 billion, including debt, that Capri paid for Versace in 2018. Previously known as Michael Kors, Capri bought Versace from the Versace family and Blackstone. The deal follows the announcement in March that Donatella Versace was stepping down as the chief creative officer of the brand, founded by her late brother Gianni. The move also comes at a time when several acquisitions and IPOs have been scuttled in the wake of a global equity sell-off and fears of recession triggered by Trump's tariffs.
Smash your way to glory at the News 9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News 9 presents the biggest corporate championship,